Never in history have I ever seen anything like this. And that was the WTI, which stands for West Texas Intermediate Oil, crashed below $0 per barrel, all the way down to minus $36 a barrel. I actually had to do some research to see what that meant, and then I found out exactly why it happened and why it didn't happen to Brent Crude, which we're going to deal with in this video today. So what we can see is, before we go to the WTI oil, I want to show you just a few predictions that I've made for oil this year. So what I'm using is TradingView, and if we go to short oil 22%, this was on the 12th of February, we saw a descending triangle form, which is basically a triangle that makes lower highs and it hits the same lows, and then it made three black crows. And what happens is, with these three black crows, is that the selling pressure outweighs the buying pressure. So I said that now that the three crows happened, that there was a higher chance that the price was going to break down and then it was going to hit a target. Okay, so if we press how that played out, it's just going to load new bars. So at the time, the Brent Crude, after it made its three black crows, went to $54.61 per barrel. It then broke below, and I set a target at a decent 42.64, which it didn't even hit. It actually opened below at $34, all because of this. But there were other factors that were involved. For example, there were travel restrictions, less fuel. There was lower demand kicking in. The world giants were cutting millions of barrels per day as the demand started dropping. And the worst was yet to come, obviously, with the COVID lockdowns and the implications it has on oil. So this played out quite nicely. And that was only from the 12th of February. Then I did another prediction. Let's just see over here. So remember, I'm using TradingView. You can follow me at Timon Rossolimos if you want. These are not really for the premium service, because the premium service is more on trades that I take, but this is more on general analysis that I do on a broader aspect. Okay. The second prediction was here: coronavirus and price war to cause oil to crash further. Now, due to the idea was hidden due to violating one of TradingView's, I kind of put Mati Trader at the end, which I didn't know I was not allowed to do. But anyway, I'll show you. It was on the 16th of March where I said, now that it's broken below that level, I expected the price to hit $18.83. Okay. And that was based on, let's see, the demand that continued to plummet. All right, so which at the time it killed more than 4,000 people worldwide. So we're talking ages ago. Airlines grounded their flights. China and Italy had their countries on lockdown. People were deciding to stay home, forego any travel to combat the spread. And then the price war kicked in, where Russia failed to reach a deal to cut oil production. And that's despite the drop in oil demand. So they kept pumping more oil on a daily basis. And they didn't understand that there was so much oil that was going to be left to use that would just be standing there. So it was almost like capital tied up in stock for a normal company. Okay. And then let's see. So this is how it played out. Oh, you can see the violation was that I prepared an ebook on how to use the TradingView platform, and I wasn't even allowed to do that. So unfortunately, this idea was not, it was published and then it was taken down. So if you can see how it played out, we'll load the new bars. You can see this week it hit its target. And guess what? I have another target and it's still not looking good. So let's go back to today's analysis and we'll see the USD WTI, which is WTI crude oil. And 3 days ago, the price went all the way down and it actually went to minus $36. Now it looks like there was a glitch over here and it wouldn't allow it, probably the way it was programmed, that no one in the world expected it to go to a negative value. So the way to understand this is that WTI crude oil works differently to Brent crude oil. And that is when the futures expire for the WTI, the contract is settled with barrels of oil rather than cash. So Brent Crude, when the contract settles for the May contract, all right, which is going to now expire at the 30th of April, they would settle with cash. So we probably will never see Brent Crude dropping below $0 because nobody wants to pay somebody to take cash from them. But with the WTI crude oil, it got to the point where it entered negative territory saying, listen, I've got so much oil that I'm willing to pay you to actually take it out of my hands. All right. And you can see worldwide, there's just gas and fuel and oil everywhere. President Trump is now blocking oil imports from Saudi Arabia. Vopak, which is the world's largest storage firm, they're saying that they're at maximum capacity. And for example, the North Sea, they have vessels that have parked all their oil inside for days and they're just like leaving it there with nothing to do and nowhere to go. So they actually need somebody to take the oil out of their hands. Okay. Now, I'll never trade WTI as of 3 days ago because now we know that the price can hit negative, and which means that gearing, you can lose a lot more if the price goes negative than even if it hits zero. All right, so trading just became even more riskier. So instead, I'm going to be only looking at Brent Crude. So let's go to Brent Crude and do the analysis for today. So as I said, Brent Crude is not something that will crash below zero because it's settled in cash and nobody wants cash out of their hands. But it still looks like there can be a significant drop going forward based on the fact that the lockdown is going to continue. The transportation is still going to come to a halt. There's still going to be less travel. Less businesses are going to be operating. Factories are still going to be closed. So there's a lot more oil that is going to be stored around that will not be at use. And so Brent Crude, as the demand continues dropping, the price is going to continue dropping. So what we can do and look at the technicals, now that we've discussed the fundamentals, let's look at the technicals. Brent Crude has formed a reversal pattern called a rounding top formation. This is a rounding top formation which started on 30th of March at $22.61. It then formed a high at over $35, and then it came back down, but it broke below. So remember the three black crows that kicked, I think in February that I mentioned, it's kicked in again. So let's just choose the high. So I've written it down here. 36.43 is the high. Okay. And then we have the low at 22.27. Okay. Now, if you take the difference between the high and the low and you subtract it from the low, you'll get the next target. And the next target is at $8.11. This is probably the most craziest prediction I've ever made. It doesn't sound possible, but the charts show that it's still going to drop further. So let's do this, drop it to red. And then what I do, I throw in a short position and let's do it from where it broke below. Let's put our stop loss. Well, anyway, I mean, this is not a trade. This is more of an analysis. And then we can publish the idea now or later or whenever. So Brent Crude looks like it's on its way down to $8.11. And what we can do in the meantime is I'm going to be looking for short positions or selling positions in the resource markets where they produce oil. So for example, Sasol looks like probably a good company to start shorting.